Whoa, what's going on, guys? Welcome back to the final episode of 2024 here on Let It Grow Investing, where I'm basically going to think out loud as to what's going on with the market, what I'm doing, how we can prepare for 2025, how we can wrap out 2024, and yeah, just basically get a feel for what the market is handing to us, what the political climate looks like, where we can potentially make some decent sized returns now that everything seems to be a little bit more overvalued, or maybe we're not going to get those huge 50, 60, 100% gains that we've seen in a lot of stocks between 2023 and 2024. So yeah, thanks for stopping in. Please make sure you like, subscribe, and share. It really does help get us a little bit more visibility to other people that might be interested. Definitely in the sharing helps a huge amount, but the subscribe and share does a lot, simply just in the algorithms for YouTube. So yeah, we've got a pretty wild course of events here for 2024, right? We had just massive gains in the S&P and the NASDAQ, and where can we turn for 2025 to get those gains again? Well, I guess I'll get right down to it. A lot of the things that I really want to see for 2025 are based on AI, some of the hardware, a lot of the software, right? I think we've had a lot of buildup in the hardware, and now I think the software side needs to get caught up, right? Oh, I got a new hat for Christmas, so thank you very much for that. And yeah, so I'm looking at a lot of the software stocks, thinking that that could potentially be a huge game changer, but a lot of them are also getting overvalued already, right? We've seen SoundHound, we've seen Salesforce, we're getting some insider sells there. We're seeing Palantir that rallied and just is beyond overvalued at this point. So I can't simply say that I'm buying those, right? It makes it really hard, but I think that is going to be a trend that is going to continue, is the AI software stocks. So I am definitely watching those. There are some ETFs I want to cover. I'll try to get back to that. So I tried to do a stock from different industries where I thought it could really make sense. So I'm not just pointing at all, these are the Mag 7 stocks, buy these, right? I think most of those are going to do very well. I think Tesla had a lot of pull forward, but I still think that with some new models coming out, with Elon getting involved in politics and pushing out some new product, we're not even looking at robotaxis and things that are speculative. There are things that are happening that I think are going to make Tesla continue to rally. But I don't think, for me, it is something that I want to scramble to get into at this given point in time. So I'm trying to find those stocks that seem to be at a fair valuation to give us a decent return for 2025 while still protecting our wealth that we've built up over the course of the last 24 months. So yeah, some of these ones like SoundHound, C3 AI, Palantir, I still think they're great long-term plays if I look out at 5-10 years, but I don't know that they're going to be the best bets for 2025. So where are we looking, right? I mean, there's a lot of different industries that are going to be hurt. I think that, healthcare, I really don't know what's going to happen there with the new administration coming in, with tariff talks, with a lot of different things going on with United Health. I mean, you can just pick a topic and there's some kind of turmoil there. So I really don't know what to think in that space. If I had to pick one, I'm probably going with Eli Lilly. I have been continuing to build that position. I probably got into it a little bit too late. And now that they are kind of at a correction phase, I am building a position into ticker LLY. So that is going to be stock number one that I am looking at for 2025. And they do have some new drugs coming out potentially. They get late stage trials for an oral GLP-1 for weight loss and diabetes. So I'm looking at that. I think some of the drugs that they have against Novo's new products that they're trying to come out with are still showing to be stronger. We've got Merck with that licensing deal I was talking about last time, which really killed Viking Therapeutics, their drug. Also for the fact that Merck was potentially going to be a buyer for Viking. That backfired. It still has Eli Lilly in that top spot. So I think that continues. I don't really know where healthcare insurance companies are going to go. If I look at the numbers, United Healthcare looks really undervalued, but that has a lot of caveats as to what's going to happen with that stock and with that whole industry going into 2025. So yeah, healthcare, tricky. I'm still looking at the winners that have been winning, and now Eli Lilly is undervalued compared to where they were selling, a couple months back. And I am buying that one pretty decently. I'm trying to add a couple shares, at least a month right now. And they're what, 780? I think at last check, they're about 780. Number two, if I'm looking at AI and all things, man, I'm still looking at Amazon. I still think it is fairly valued. There's a lot of things that are going on in Amazon's business, right? You still got AWS. There's still a hyperscaler on AI. They're still building out all of that different business. We've still got, retail. The consumer's pretty strong. They are still pushing Amazon Fresh. They got the grocery stores. They got pharmaceuticals. They've got every different aspect of every different thing. So I really think that they have a lock on all those industries. It's really hard to fight them, and they're continually growing, right? They're not simply just a bookstore or just simply a retail store. They are all things to a lot of people. So that is going to be number two. I still think they are fairly valued. And I think that trend continues to where they can really, ramp up with their AI spend and the revenue they're going to see from AI and in their cloud business and everything else. Number three, I'm still looking at AMD, guys. I know a lot of people are going to give me a hard time and say, no, NVIDIA. I still think that for 2025, if I'm looking at 1 year for 12 months, I think that AMD could have a better 12-month return than NVIDIA. I know there's a lot of things there. NVIDIA is still the top, right? They're still the king of the AI chip space. They are the top. They are the benchmark standard, gold standard, whatever you want to call them. But I believe that AMD, with the way that they are spending and delivering, I think coming off of some weaker than expected 2023 and 24, I do believe that they're going to start rallying into 2025 with the numbers and the guidance that they have posted. So with revenues going up and earnings per share going up, especially into the back half of the year, I really do believe that AMD could outperform NVIDIA in the next 12 months. I'm invested in both. I have probably 2.5 times more in NVIDIA, but that's not to say that AMD can't be your 1 year winner, right? So that's what I'm looking at there. And that's not any kind of shot at NVIDIA. I hope that they do well. I hope that we can see a 30 or 40% gain from NVIDIA. I don't know where they're going to end up. I would think they could be 170 to 190 by the end of next year. Simply just looking at the numbers and how things are trending, they could certainly outperform that. There's no kind of top as to where that thing can go if they start being in rally mode again. We've been trading sideways. We've been testing 130-ish, and I definitely think we can get back up into that 170 range without a blink of an eye. So it's not going to take much, and they're going to keep accelerating and really trying to work that business to every last piece of their efficiency. They're going to keep on pushing out the chips that they know that people need. We're going to get more on the Blackwell chips. Those are going to start coming in, start affecting that bottom line. I think that's going to be huge, but I'm still saying AMD for 2025. Number 4, and this one kind of has a little bit of overlap. Adobe. Oh, man, I still think that Adobe is a great stock. They're really leaning into AI. I think that for a lot of the things for efficiency, I believe, a lot of the creators that are leaning into Adobe are going to continue to buy their products. Businesses are going to continue to buy them. And they've been oversold, and I think they are kind of due for a rebound as more and more people figure out that they have become an AI play as well. And really one of that business productivity type companies. So there's a couple in this space that I still think are going to be really strong. Oracle, ServiceNow, they're still very, very strong. CrowdStrike, still a great company. And if I got to go over my blunders for for 2024, I think I can't go without saying that I shouldn't have got completely out of CrowdStrike. I did that initial sell when it got, all the things in the world shut down. I think I trimmed at 320, 325. I can't recall. And then I sold out completely at like 270 to 280. It dropped down to 220. I probably should have trimmed at 325 and waited for the bottom and bought back in. That's probably what I should have done. But at the same time, I took a lot of profits and, I didn't lose any money on the trade. I still don't really know what the repercussions are from everything associated with the outages that were, from the update from CrowdStrike. But it looks like a lot of that has passed, and now I've kind of missed the boat. I know there's still some upside on that one, but another AI stock, cybersecurity stock that has just really a great quality company that had a couple bad things that were huge bad things, but I might have overreacted on that one. And that happens, right? I guess if you're going to be trading, if you're going to be watching these like that, I don't normally think of myself as a trader. I'm more of a long-term investor that's kind of trying to rebalance my portfolio to be in a lot of long positions, narrow down how many stocks I have, which is certainly a problem that I have really built in over the last 9-10 years of trading or investing. And I am trying to kind of redefine what my portfolio looks like from a lot of the names that I have and trim that down and get into the right plays for me for the next 5, 10, 20 years. So some of them are going to stay longs. Some of them are probably going to be in and out of them. And I try to keep a tab as to what names are going to be longs, which ones I'm betting on for a quick rebound. One of those was Target. That's another, not really a blunder. I pretty much sold it flat. It had definitely some problems there for a while. Started getting, some traction and moving up higher, and then sold out or sold down. And as it came back up, I said, you know what, I'm getting out of it. I sold out of that and Viking around the same time and moved into some other plays, AMD, Micron, Eli Lilly. And that's where I was on those. So those are some of the things that, maybe I need to look at for how can I be a better investor for 25 and beyond? And really, where do I want to put my money for those long-term gains? Another one that I like is going to be LMT, Lockheed Martin. Lockheed Martin, great company, a lot of backlog, a lot of things going well. For them, the amount of war and problems in the world is a benefit to them. I don't think with Trump coming in, we're going to have so much in the way of tariff talks. Granted, there might be some other things that happen between, international powers that does slow some numbers down there. But I still think, or we won't let Lockheed Martin sell abroad these different things. I think there's going to be a strong business for Lockheed Martin going forward. So there's a lot of upside there. And that one has traded down. So that's kind of the 5 names that I'm really looking at. Adobe is definitely one that I was in and out of. That is not one that is actually in my portfolio. The other ones I'm in, that probably accounts for, I don't know, 15 to 20% of my portfolio. Maybe not that much. Probably about 15% of my portfolio in those 4 names. So I am definitely in on those. There are other names that I really like. I still like SOFI. I still think SOFI's got a good ways to go. They've got probably a better 2026 as things roll out. Some people, I've been watching some other, we're entering 2025 videos or some different articles, and someone said PayPal. Man, I think that, they've got a rebound going over there, but I don't really know where that company goes. I know they've got a lot of new products coming out. I know there's a lot of things that point to the back half of 2025 being a strong period for PayPal, but I just don't know that it's a stock that I really want to be in. I'm not too certain as to where that company goes from here. I think if I had to pick a fintech, I'd probably rather be in a Visa or a MasterCard or even American Express. Banks are a little tough too, right? From the standpoint that we've still got mortgages at that 7%. The economy still looks fairly strong, but inflation is kind of staying sticky. We're not going to see as many of the rate cuts. At least that's what we heard at last check from Powell. So are we going to get as much in lending? Are we going to get refis? I don't think we're really getting any refi business. So, those refi rates on a 30-year fixed were like 7.1%. So are we going to see that? Are we going to see buyers kind of flock back to the market, or are they waiting for those cuts to come back and get back down into maybe the 5% range in order to buy that house, right? I'm sure there's a lot of pent-up demand. We've had higher rates for 24 months or so. And now, yes, we're trending back lower, but at the same time, are there enough people that want to go out and buy or build new homes at 7%? It's definitely tough. Yes, prices have come down in some regions, but not all. So, yeah, I mean, different spots around the country in Vegas or some places in Texas. I think Florida is kind of trending back down. But there's other areas, even like on the East Coast where I'm at, that they're still strong. It doesn't really matter because there's so many government jobs that it really doesn't slow down the market. So, yeah, you're still at 7%. And you didn't get a break on the house either. So can people afford that, especially with inflation staying high, food staying high? So we really got to see what happens there. I think that is a negative for banks. I think that's going to be a negative for home builders, especially those higher end home builders. I don't know if we're going to see as much gains there. So a lot of different things at play. Let me do want to share some of these different ETFs, right? I did promise some ETFs. Let me go ahead and share my screen and see if we can't pull up this US, I think it's US News. Let's see if we can't pull up this article. 6 of the best AI ETFs to buy for 2025. US News. I was looking at this one. I really like the mix of AI and next gen software, IGPT, for those that are not watching the video. Expense ratio is 0.58%. Robotics, I don't know how I feel about robotics. I think the AI and tech is really where I'm looking. I think that robotics has a bright future. I don't know if it's in 2025. So I'm looking AI and software, or like the AI and technology, but this one's a little bit more expensive. So then if we are looking at this, I guess we could even look at big data. This one's a little bit cheaper, the X trackers, XAIX. But I did have IGPT pulled up. So let me go ahead and pull that one back up. Let's go ahead and share this one. And so when I am here, I am on E-Trade. I do not have any of this one. This is just one that I'm looking at for something that I think makes sense to go ahead and get into. So this one is an Invesco fund. We have, a mixture of, medium, large, giant, a couple small caps. 3% of the fund is in small caps. So when you're buying an ETF, you're getting a mixture of companies. So you put in $100 and you get 31% of your money is in giant companies. $44 goes into large cap companies, and it gets broken down this way, right? So we've got the top 10 holdings. Accounts for 56% of the assets in this fund. And so if we're putting, say $100 in, we're getting, sorry guys, let me try to do that again. This is what I'm looking at here. It's being real touchy. There we go. NVIDIA, right? You're getting 8.5% there. So $100 put in gets you about $8.50 of NVIDIA. You're getting Meta, $8 there. Alphabet, AMD, Adobe, Intuitive Surgical, Qualcomm, Micron, and Intel and Equinix. So a great mixture. Not all of them that I'm looking to buy, but I definitely think there's some really strong names here that should do really, really well. Qualcomm, I told you guys I traded out of that one. For a lot of the things that they're fighting with Apple, trying to really, get their footing back as to what kind of company they are, what they do, and who their customers are. I think there's going to be a little bit of time before that one really takes off. The other ones, Intel, I'm not a huge fan of. I'd rather be an NVIDIA, or I'd rather be an AMD. But 8 of the top 10, I think are great companies that I would buy right now. And the other ones, I don't know that that is going to be the biggest detractor, right? So if you're looking for a basket of companies simply by putting in, however much money you want to buy, you can go ahead and buy this, basket that's really going to incorporate a lot of the names and a lot of the trends that I'm thinking are going to be solid for 2025. If we look at the performance of IGPT, and I have not looked at this, I'm going to say it's been pretty solid. If we would have put in $10,000 back in 2015, it would have turned into 38,429. Now, you know what? Just for giggles here, we'll call it. I'll be PG. QQQ, right? The NASDAQ index. If we would have put in $10,000 back in 2015, it would have grown to about 52,000 now. If we were just investing in the SPY, the S&P 500, that would have got to 34,000. So IGPT, I believe, outperformed the SPY, right? Now I'm trying to, this was 34. Let's take a look at this one. Excuse me. 38. Yeah. So IGPT did a little bit better there. Triple Qs outperformed over those. And I know one of them we were looking at just there was bots. Let's take a look how bots is doing. And I want to check the portfolio on that one and see. This is, a good chunk less. 10,000 would have turned into about 22.6 over the past 10 years. If we look at the portfolio on bots, what do we get there that we might have not got on some of those software stocks? NVIDIA, Intuitive. Oh boy, I don't even know these. ABB, Keyence, SMC, Dynatrace. Oh man, I don't know anything other than the top two off the top of my head. So yeah, definitely some smaller caps. I'm going to assume we have a lot of different countries. Only 53% are U.S. We've got 18% in medium caps, 22% in small caps, and 4% in micros. So you're getting a lot of those smaller startup companies by buying something like bots compared to IGPT, where you're getting a lot of larger companies into that portfolio, at least into the top 10. So yeah, definitely something to take into consideration. Where are they based? Tariff talks are going to be huge. Where are they in the cycle? Are they going to be these startup companies that have got to do a lot of borrowing? How, strapped for cash are some of these smaller companies if they have to borrow? And really take a look at that before you're getting invested in some of these smaller startups with rates being higher. That's definitely a factor there. So that's what I got there. I did want to pull up our Webull portfolio. Let me see if I can't do this. Let's share this one instead. I still am not used to using this on here, so forgive me, guys. Nope, that's not mine. That's just options trading. This is going to be our Let It Grow investing portfolio, which I'm really used to doing on my phone rather than on the web app here. So this one, maybe not even a web app, just a website. So I am not really helpful. But let me see. I can pull up this one, and I think I had it pulled up earlier as to what we had in this account and what I was looking at. So yeah, I'll share this one instead. So yeah, we have about $37,000 into this account at this point. That has been over the course of 3 years. Pretty much about $30,000 of my own money put into this, $200 a week. The first year was 2022. We were down like 16%. So we've made about 40% over the course of 23 and 2024. We've got about 25% of gains. We've made about $7,400 so far. And we're going to see how we can start out, 2025. Maybe we buy a little bit more IGPT. Maybe we sell off a couple things and, get reinvested into some other plays. But that is really what I'm looking at for 2025, guys. I've got a lot of different things that make sense to me. There's a couple different things that I would like to focus on. Hopefully, if you guys have any ideas as to things that you want to see or things that we want to cover, feel free to share it in the comments. Feel free to comment on Facebook. And yeah, that's what I got. Hope everyone had a great holiday season, and a happy new year. So that is about all the time that I got for today. And I will catch you guys in the next one. Take care.